Hello everyone, and welcome to today's webinar with Clean Horizon, where we'll be discussing one of the most pressing topics for the industry today: how to generate revenues from business models that are less reliant on ancillary services income. I'm Andy Colthorpe, editor of Energy Storage News and deputy editor-in-chief here at Solar Media. We're always excited to bring you these webinars, but as I say, today's is on a really crucial topic that examines what comes next for energy storage assets as the industry reaches a new frontier in terms of maturity and smart business models. Markets have opened up to energy storage progressively around the world in the last few years. As they have done so, ancillary services such as frequency response or frequency regulation or even frequency control, the terminology varies a little depending on which market you're in, these have typically been the main set of applications that battery storage systems have first provided, particularly in front of the meter. And it makes a lot of sense because frequency applications generally require injecting bursts of power into the grid, but can be done by shorter duration battery assets, which means they can be cost effectively and quickly deployed. Meanwhile, for grid operators and regulators, the need for grid balancing grows acute as renewables come online and thermal plants retire, and therefore these services can be initially quite lucrative due to the high value they offer. However, as you can tell from the title of today's webinar, and most likely from your own perspectives and experiences of the energy storage market, the business case for energy storage does not end with ancillary services. In fact, while grid balancing ancillary services will remain an extremely important suite of applications that storage can provide, offering high value to the electricity system and society in general, in years to come, they will represent a relatively small percentage of what batteries are doing on the grid versus smart energy trading. As we go towards energy systems based on much higher percentages of renewable energy, these forward-looking applications will change the dynamics of this young industry all over again. Today, we'll be hearing from expert speakers at Clean Horizon, as well as a special guest speaker from route-to-market provider USO, on what this means for your assets or investments. Our speakers today are Michael Salomon, President of Clean Horizon, Bart Picker, Managing Director at USO, and Clean Horizon Senior Analyst Amin Ben-Sharifa. Presentations will be followed by a panel discussion, and then, as always, interaction with you, the audience, is very important to us. So please do put your questions for the speakers in the questions tab on the right-hand side of your screen, and we will try and answer as many of those questions as we can within the short Q&A that we've allotted time for at the end. Now, while we try and answer as many as we can, we won't be able to get to all of your questions by any means, but Clean Horizon representatives will be more than happy to reach out to you and continue that conversation in more depth offline. And finally, before we begin, just to let you know that the presentation slides will be available to all registrants, and the recording will be available on demand on Energy Storage News, as well as on our YouTube channel in days to come. So with that out of the way, it's my great pleasure to hand over to our first speaker, Michael Salomon of Clean Horizon. Hi, Michael, and it's over to you.
Hi, Andy. Thank you for the introduction, and thanks to your colleagues at Solar Media for helping set up this event, and thanks, Bart. Thanks, Bart, for contributing. So just as we get started, just a quick intro. I mean, so my name is Michael Salomon. I founded Clean Horizon 15 years ago. We have been since then a one-stop shop energy storage consultancy with amazing stats, as you can see here. So basically, we work both as a market analyst and as a technical consultant, heavily involved in procuring and designing storage assets all over the world. So we act indeed both as a market researcher. We provide price forecasting, and we're going to discuss a bit of the results of those forecasting in Europe, and then we act as an owner's engineer. Regarding the price forecasting, it's an activity that we do mostly in Europe, in those countries there in white on that map, and the other ones in blue are the countries for which we will be rolling out our forecasts pretty much starting this month until the end of the year. So I will make a quick introduction so you understand exactly what will be our angle today. So that introduction, you don't necessarily have to read that slide. You will be able to obtain it as Andy mentioned, but I put there as a reminder the typical ancillary service that you can use to build a revenue stack for a storage asset in, I would say, most European countries, and they're, I would say, carefully split in two columns. The column on the left are the services for which you're paid by the capacity that is rented, and the column on the right is the service, or at least the service you provide to the grid, for which you're paid for the energy that you're providing. And in that right column, I do include ancillary service as well as typical energy markets. And this is more as a reminder for those who don't know. And again, when if you read those slides later, and you just can use this as a glossary if you wish. The one point I would like to be making today, and which will set up the stage both for Bart and my colleague Amin, is that whether we want it or not, we are shifting from the left column to the right column. Another way to say that it would be to represent things in on a time scale, and for a few example countries, but I could have done this for many other European countries. And these represent the acronyms or the names of the market that you see here represent the main drivers or the main revenue line for the storage revenue stack in those given countries. And it will be no surprise to those of you that have been in the business for a while that acronym FCR, so the frequency containment reserve, is no longer the main driver for those revenue stacks. And that actually prompts a lot of changes in the way the business case of storage assets in Europe can be thought of. So I prepared this one chart that hopefully will leave a mark on everyone's brain, and if you can remember only that graph, probably should help you realize what the issue is. So what I'm showing here is the FCR prices in France, so which is more or less almost the same with some differences as the FCR prices in on the regulation platform. But again, France may be a bit more extreme on that, but at least it will set the stage better than in other countries. So I'm showing here the monthly moving average for FCR prices, which are provided in euro per megawatt per hour over the past almost 5 years. And as you see, okay, those prices have fluctuated in, quite clearly they were very high in the winter that preceded the energy crisis, and they remained very high during the energy crisis following the Russian attack on Ukraine. I added two red lines on that graph. The bottom red line shows you what I call here the profitability threshold, meaning the amount of revenue you should be getting on FCR in euros per megawatt per hour, which you should be getting every hour, every day, in order to be in the money. That is to have a reasonable IRR for your 1 hour battery. So you need to have, I believe we computed this over 10 or 15 years, I'm not certain, but let's say you need to have this amount of revenue in euros per megawatt per hour every hour for multiple years, more than 10 years. And as you can see, indeed, whoever had a battery, either 1 hour battery or 2 hour battery, anyone who had a battery during the energy crisis certainly had a lot of good years in terms of revenue. But you should just remove the chunk for the energy crisis in the middle of this graph, and you look at what was the trend before, which it was already below that profitability threshold, and it was actually trending downwards. And now that the energy crisis is behind us, it's, the trend of FCR prices, it's just not that it trends downwards. It's actually that it reached almost zero. In a country like France, it's typically at approximately €1 per megawatt per hour, more or less. So that tells you that anyone who was involved in building business cases for energy storage relying on FCR, which, by the way, was a very simple way to earn money with your battery. Once the battery is pre-qualified, you just place a zero bid on the FCR auction and you just wait for the marginal price to clear and you just take the money. There's not a lot of almost no steering to do, almost no sophisticated trading to do. You just wait for the price to appear and just to cash in the money. Well, those times are gone, completely gone. They are behind us. And the reason why we set up this call is this webinar is that we do understand that this is a point of concern or of anguish even for some for lenders, for some investors, or for some IPPs. And we thought it would be good to bring one specific route to market to this discussion in the name of USO. And this is why Bart will speak just after me. And the reason we asked him to join us is precisely going beyond just selling capacity on the FCR market is something that has been going on for multiple years in one country in Europe, and that country is Belgium. And there's one, and if there's one aggregator, one route to market that has known how to do sophisticated trading on various ancillary services in Belgium, it's clearly USO. So I've asked him to join us to provide a bit of his return on experience. And then after this, my colleague Amin will take the stage and generalize Bart's experience based on the real and past data to show what the revenues will be looking like, according to us, in other European countries once those FCR type revenues are either completely gone or have become negligible. So without further ado, I will let the next speaker speak and disappear.
Thank you, Michael, and thank you very much for this kind introduction. And thanks to Clean Horizon and Solar Media for the opportunity to basically present our company, our activities, and also share a bit our experience on the Belgian market. So the topics I would like to cover today, I will briefly start by saying something about myself and USO. This is the company I co-founded 12 years ago. Not everybody on the call might have heard of USO, as we are operating batteries in a relatively small market, Belgium, but now also expanding to the UK and other markets. Then I will go into the problem with renewables in a market-driven system, and why the batteries are such a game changers in the utility landscape. And then more in particular, focus on energy strategies and the experience with the utility scale batteries we have in our portfolio in Belgium. So a little bit about myself. I'm an electrical engineer by training, and I had actually the privilege to witness the changes in the energy market in the past 25 years firsthand. When I started my career, I was recruited by the National Dispatch Center in Belgium. It was a very regulated setting. Basically, as a dispatch engineer, we were planning both, the large-scale coal, gas, nuclear power plants, as well as the grid assets, because there was no unbundling. So that brings me to the first change I witnessed, and that's the whole unbundling. Things we take for granted today, like a TSO, being responsible for the transmission lines, access to the grid, and having competing markets and institutions like the spot power markets, or something that didn't exist like 30 years ago. And I think it was very interesting in the first part of my career to work for a utility and to basically, I would say, introduce, develop, and bring the trading capability where after a while the assets were no longer, I would say, planned, but they were actually driven by prices on how they were operated. But there was a second very important change in the energy market in the past 24 years, and that is the renewable assets, because in the past it required a lot of capital to basically build large-scale power plants, and with the advent of wind, but definitely of solar, everybody could become a producer And also the nature of the asset, a renewable asset, was totally different that from a power plant that could be scheduled. And so actually this second, I would say, trend, the advent of the renewables, bring me actually to USO. USO is basically a company founded by myself and a previous colleague at NG Electrabel 12 years ago. And we started the company initially as an aggregator of renewable in-feed. Basically, what we did is offering PPAs, power purchase agreement, to producers. And we did so with a particular angle, is that we wanted to connect the renewable producer directly to the wholesale markets. Rather than offering them a classic PPA with a fixed price, we were offering them a direct route to, let's say, the spot energy market, Belpex, now Apex Spot at the time. And we saw that portfolio grow. Today, we operate something like 2,000 renewable installations, an aggregated in-feed of 300 megawatts. But at the same time, we developed a retail activity. You could say the activity of an electricity supplier. Basically, in the beginning years, we were doing the opposite of an electricity supplier. We were bundling power on the distribution grid, bringing it to the wholesale grid, connecting it with markets. And while traditionally an electricity supplier was basically buying electricity wholesale and distributing it. So, but we also started an electricity supply activity. But doing so, we stick to only offer pricing on short-term electricity market. Also today, for our more than 500 B2B customers in Belgium, we don't offer any fixed price. That also means that USO, because we both have the generation side and the offtake side, is ideally placed to offer products like, for example, corporate PPAs, where part of the power is priced against the market, but part is just bilaterally agreed between a renewable producer and an offtaker. Or things like, energy sharing, where basically renewable producers can peer-to-peer or share their energy. And that also, puts into context our experience with batteries. We started relatively early with batteries. We operated first utility scale batteries more than 7 years ago. It was a 10 megawatt hour plant in the Netherlands, offering at the time only the famous aFRR Michael taught in the beginning. And actually, USO showed there in that case that by having smart strategies around the aFRR, notably with state of charge management, we were able to generate additional revenue, which was much appreciated by our first customer. And that basically brought the idea, as we are a Belgian company with a Belgian portfolio, to start developing such assets in Belgium. And we believe that the Belgian market is uniquely positioned for battery storage. Here you see the list of the handful of utility scale batteries we currently operate. I mean, all those have been in operations for more than a year. And all those, I'm very proud to say, have actually surpassed the initial business plan that we established with these investors the day we sat together. So as a picture says more than, I would say, 1,000 words, I also added some pictures of utility scale batteries operated by USO in the Belgian market. And also the one on the bottom right is actually on the top right is actually from the UK. And also very important and increasingly important for USO is the what we call embedded batteries. We're not particularly fond of the terminology front of the meter or behind the meter, because any battery is behind an electricity meter. But we do believe that these embedded batteries, which are co-located with, for example, solar generation, co-located on a site where it's consumed, will also be a very play a very important role in the energy transition. So while I will focus a little bit on utility scale, know that USO is also very active in embedded commercial scale battery system. So before diving into the core of the topic of how to manage batteries, let's take a step back and first look at the problem with today's the problem with managing a renewable portfolio in today's energy markets. And to illustrate that, I here put, quite a random day. It's of the real-time electricity prices in the Belgian market. And what you typically would see is that there's a very high volatility between the price of electricity in certain hours, notably, I would say in the afternoon when there's a lot of solar being generated, often leading to a real-time price which is zero or negative. And then, in other time periods, for example, in the evening when there's little sun and wind, or when there's a higher demand, you all of a sudden see very high electricity prices. These electricity prices are driven by the balance of the electricity system, and the whole balance is driven by the dominant role utilities play in today's energy system. Sometimes at USO, we see ourselves as, at the cross-section of all power traders and all meteorologists. And actually also in the company, we have, a weatherman working alongside portfolio manager, alongside quants to really get a grasp on how to operate in these complicated electricity markets. Now, why is it so hard to, let's say, manage a renewable portfolio in the energy markets? Because, well, one very important reason is that despite all the sophistication of weather model, it's not possible to fully predict, I would say, what the weather is going to be on the day itself. I think we all experience that, we know that, and with USO we also see that. You can even have the best weatherman, the best model, yet you can always be surprised by a cloud turning up or a weather change. On the other hand, the whole electricity system is set up that you need to be in balance, that you need to announce the day before how much you're going to produce and how to commercialize that. And it's really very hard to do that. And I'll take a very simple example, and I hope I don't offend the intelligence of the audience or any speaker here. Is imagine you just have one solar plant, and in the day ahead, you think that this solar plant will produce 100 units. Then obviously you will sell these 100 units on the market. And then on the day itself, any of two scenarios can happen. Either the weather is actually a lot more favorable, a lot more sunny, and congratulations, you don't produce 100 units, but 120 units. Now, the problem is that these additional 20 units will have a very low economic value. Basically, they will be zero or even negative. But assuming it's negative, you will then end up with a situation that you have collected revenue for 100 units, but your producers produce 120. So they really expect you to pay them for 120 units. Reversely, if during the day there is a change in the weather pattern and only 80 units are produced, well, you have a different problem because you already committed to deliver, to the exchange or to the TSO or to your counterpart 100 units, but you only have 80 units produced. So you need to buy back 20 units, and you need to do that at a very high price. So basically, usually you have like two scenarios, a good one and a bad one, but here both scenarios are bad and you cannot avoid that. I mean, if you basically produce more than you forecast, you lose. If you produce less, you lose as well. And it's really like a lose-lose proposition. And at USO, we've been battling for more than 10 years, like how to deal with that problem. And over the number of years, we created quite a number of solutions with that. The first one is obviously, let's make a better forecast. And that's definitely something we've been working on a lot. The second one is, well, let's not only do day ahead, let's also make sure we adjust our portfolio during the day with intraday trading, with automated traded robot trading. And that's another avenue you can take. Another avenue you can take is obviously make a more smart pricing and try to share the risk between the renewable producer and I would say the renewable aggregator in a more smart way. Another thing that we do is obviously taking a more holistic approach. Instead of only forecasting the volumes in your portfolio, if you can really forecast and get a grasp on the market price and the market dynamics, you can obviously also position you very favorable. But our most, I would say, favorite solution of dealing with this problem of renewables are batteries. And the reason why we are so fond of batteries is because instead of a lose-lose proposition, it's a win-win proposition. A battery is always placed on the right side of the market, because obviously a battery with the flip of in a split second, you can switch it from being, a producing unit, injecting power on the grid, to being a consuming or off-taking unit. And that's a very powerful capability, actually. And to market this flexibility in the market, there are basic two strategies. The first one is the ancillary strategy, what Michael says, the left column in his chart. And the other one is an energy trading strategy, is the right column, and the one we're specialized in. With regards to the one way to think about these two different strategies is who steers the asset. In the ancillary strategy, it's really the TSO that steers the asset. You basically hand the keys to your battery for let's say, a certain interval, be it 4 hours or a day, to the TSO, and the TSO, based on the frequency, based on the country system imbalance, will steer the asset for you. There's nothing you need to do. You don't need to be particularly smart in generating revenues in that way. In the other way, it's really like holding the dispatch right and steering the asset yourself. You don't commit anything to the TSO, but you just operate the battery and the energy markets in the most favorable way. Note also that both strategies are actually merchant strategies, because in both strategies, the battery owner needs to take the outcome of a market process as revenue for, I would say, income for its plant. So in practice, how does that look like? Here you see it mapped out for the Belgian market. You see again the acronyms that Michael has presented coming forward with. So concretely, there are like 8 different markets where a battery owner can generate revenues on the Belgian market. And in the day ahead, or starting even 2 days before, there's a cascade of auctions, of market processes which you can participate in. And obviously, the key of your route to market provider is to make sure you obtain the best price. And one way we do that is, for example, if you think about a market like FCR, the purely capacity-based market, we will help our owners bid in, always not at zero and take the market price, but also always with an opportunity cost perspective. We will always put in a floor where we see a level that we could generate, I would say, revenues with the battery and an energy-only strategy. So it's very important for each step you take in this logistics chain to optimize that compared to the market. So in order to do so, we need to harness a lot of, I would say, IT, because obviously you need to decide every 2 seconds how to steer your asset, be it, because you get a signal from the TSO, or be it because your algorithms and your trading strategy says so. And ultimately, it's actually this outcome of this process determines how much revenue and what kind of revenues that are generated. And I put here, a very concrete case of a utility scale BESS in Belgium. I will not disclose which one it is, nor for which month. And you can see that at the end of a month, the revenues that were generated were a mix of energy and ancillary strategies, but actually the majority of all revenues generated were coming from energy strategies. So actually what Michael is saying, it's shifting and it will be the future. I would say the future is already there, and we see half, or even on some months, 3/4 of the revenue generated with energy strategies. So we also actually recently started activities in the UK. It was actually, UK is in that sense a much more transparent market, because you have this kind of, a lot of information is published by the UK TSO, and I would say information providers produce then a kind of a leaderboard on who generates which revenue. And we were obviously very proud to share that we have managed to raise to the top of the leaderboard for the UK route to market provider for a 1-hour battery system. But coming back to also the topic of the seminar today, why it's important to think beyond strategies. And I think it's just looking at the size of the potential market for your battery. I put here the budget that the TSO in Belgium, Elia, has for the procurement for ancillary services. And it's approximately like 200 million euros a year. Compare that to just the day ahead and the intraday market, which have, with a very rough estimate, at least 4 billion euros in revenue or energy trading. So you see that there's actually the energy market is 20 times bigger than the ancillary markets. And I think this analysis is vastly underestimated if you would put today's numbers with today's volatility. And if you look even at other markets with it could easily be a factor of 30 or 50 times that the energy markets are bigger than the ancillary market. So it's crucially important that there is an energy strategy for your battery to benefit optimal from this flexibility. So the main takeaways I have for today, and I would like to share, and we can then discuss, is that the main challenge with renewables are the intermittency and the balancing cost. The balancing cost is not merely a concept for energy nerds. I'm convinced that any renewable investor will really need to understand how these balancing costs arise, how they can be mitigated to really continue develop, I would say, renewable assets, and obviously increasingly so batteries. That provision of the ancillary services, it's a good start. But it's a niche compared to the wider need for flexibility in the energy system. We see increased penetration of solar and wind. We see no end to it. So these batteries need to be deployed in the energy market to balance the system. Also very important is that you partner with a route-to-market provider who is able to optimize across the ancillary markets and across the energy market, both in standalone configuration, that's where the asset is directly connected to the grid, or where the asset is embedded, co-located with local production, local offtake, which we will also increasingly see. Using big data, algorithms and automation are at the heart of a route-to-market activity. We have a very strong IT team at USU to manage all this data. And I also think that the Belgian market is ideally designed to optimize it, to optimize this revenue. As I illustrated, one thing is our real-time energy market, the single imbalance price. Another thing is that, for example, utility scale batteries, they get an exemption for grid connection tariffs in Belgium, and also our TSO, Elia, has really developed a number of products in a technology neutral way, so that basically batteries can participate in a level playing field in the ancillary market, but also, they can participate in the real-time energy market. And we feel we are uniquely, but I would also say on the Belgian market, this is not uniquely limited to Belgium. We see the Belgium is actually at the forefront because they're implementing the ENTSO-E model. So we see more and more other markets, and our experience with the UK, who's even no longer part of the European energy market, shows that in a lot of markets, this will become crucially important. So we feel uniquely positioned in this market. We would be very I would say motivated to also enter into discussions through Clean Horizon with any potential future owners of battery or current owners of batteries. With that, I'll hand it over to the next speaker, and I look forward to the interaction in the panel later. Thank you.
Thank you, Bart. Thank you, Michael. Michael and Bart discussed the present and the past revenues, and I'll be discussing what we're expecting for the future of energy storage business model. And to do so, I will introduce first Cosmos, which is a tool that we have developed at Clean Horizon. And with this tool, we can simulate the dispatch of a storage system in the different markets and calculate the potential revenues for a storage system or a hybrid system with PV or wind. over the lifetime of the project, 15 or 20 years. With these revenues, we can calculate the cash flows, considering all the costs of the projects, in order to calculate the NPV and IRR of the energy project. And with all these values, we can run different sensitivity analysis to determine the best sizing for the storage system, the capacity or the duration, and also for PV and wind, and also the grid connection if applicable. So how does this tool work? Well, in Cosmos, we are dividing the markets into two segments. First, markets where we'll take decisions one day before. These markets are auctions that are cleared one day before, and we know the results one day before. It's the case for the day ahead, for the primary reserve, aFRR, secondary reserve, if applicable, and the aFRR market, and also for a hybrid system, the PV and wind production. So for this market, what we are doing is we are taking into consideration all these prices, considering a perfect foresight for these prices and for the production of PV and wind, and considering the technical constraints of the system, the state of charge, the size, the grid connection limits, the degradation, the number of cycle limits, and also the market rules. What's the minimum energy requirement to participate in the market? What's the oversizing needed to participate in a given market? So all this will be used to run a linear optimization and determine the positions in each market for each trading period. Then these results will be considered as constraints for the second step. So we're calling here the D-Day simulation, and it's for markets where we can change the position up to few minutes before delivery, depending on the market. And for these markets, we are not considering a perfect foresight of prices, so we're not using a linear optimization. But what we are doing is basing our trading strategy on threshold, buying and selling threshold, that are calculated based on historical data to maximize the revenues. And the tool will discharge when the prices are higher than the selling threshold, and charge when the prices are lower than the buy-in threshold, if possible. So with this approach, we can navigate the complexities of the energy markets effectively, and enable us to have very interesting results and revenues close to what will be done by a route to market. And to run our tool, we need a price forecast so that we can do long-term predictions of the revenues. And price forecast is also a key expertise at Clean Horizons. And I will be sharing results from Belgium, France, Germany, and Spain in the next slides. And we can start with Belgium, where we can see that the trend is very clear, where the revenue is coming from energy trading. And here in energy trading, I'm considering day ahead, intraday, aFRR energy, and aFRR energy trading. So these revenues are increasing. In the first years, the revenues from ancillary service will still be at 50-60% of the total revenue stack. This can be explained by the fact that in Belgium, the prices for ancillary services are quite high compared to other European countries. For example, the FCR in Belgium last year on average was around 25 euros per megawatt per hour, and aFRR up and down was around 50 euros per megawatt per hour. But with more batteries installed in the country, prices will go down due to cannibalization, and the revenues from energy trading will count for a higher share in the revenue stack. The second country is France, where we are expecting a similar trend for ancillary service revenues. The difference in France is that revenues or prices for ancillary services are already very low. Last year, for the aFRR was around 7 euros per megawatt per hour, and the beginning of this year we're very close to 1 euro per megawatt per hour. Of course, the aFRR capacity is expected to be launched this year in France, so another or a new revenue for ancillary services. But as in Belgium, with more storage expected to be installed in the country, the prices are expected to go down, and the revenues coming from energy trading to increase. Another difference also for France is the revenues coming from the capacity mechanism, which are interesting because it's a fixed revenue for the storage system, and it doesn't depend on any trading strategies, which is not the case for ancillary services and not for energy trading. And the third country is Germany, where we can see that the revenue stack is very similar to Belgium. With first years, the revenues coming from ancillary services are still very high in terms of percentage. This also is explained by the fact that revenues or prices for ancillary services in Germany are high compared, for example, to France, and the aFRR price around 8 and the aFRR plus up and down around 30 euros per megawatt per hour. But for a country with very high storage penetration, the second largest storage market in Europe after the UK, the revenues coming from ancillary services are expected to go down also, and revenues coming from energy trading to increase. And in Germany, the intraday continuous is a very interesting market, where probably a lot of revenues will come, or energy trading revenues will come from this market, because it's very liquid and offers a lot of opportunities for storage asset in Germany. Last country is Spain, and I want to share this revenue stack for Spain just to show a slightly different story, where the revenues coming from energy trading are not representing long-term 80%, 90% of the revenues, and the ancillary services are expected to still a high level compared to the other countries in terms of percentage. This is mainly due to a historical trend where the spreads in the energy markets in Spain are lower than the spreads in other countries. For example, last year for the wholesale, the spread was around 50 euros per megawatt hour in Spain, compared to almost double for Germany, with around 100 euros per megawatt hours for the day-ahead spread. So to summarize, the revenue model and the business model for energy storage asset is shifting from ancillary services based business model, especially aFRR historically, to a model where the revenue stack is more diversified, and where the energy trading revenues will represent a higher share. This, of course, comes with a lot of challenges for the stakeholders in the industry, but also opens up very interesting opportunities for innovation and different trading approaches in the energy sector. With that, I think the floor is yours, Andy, for the panel discussion.
Thank you very much, Amin. Yeah, brilliant presentations from the three speakers. I can see that our audience attention was very well held, and lots of brilliant questions coming in. Now, we have so many questions from the audience that we are not even going to be able to do maybe 1 or 2% of them. But as I mentioned before, the panelists and Clean Horizon and USO will be more than happy to continue those discussions offline after the session. And in fact, some of them may be a little bit too technical to handle in this public forum anyway. But yeah, as I say, they will do their best to get to them. But before we get to some of those audience questions, a few questions from me. And I think hopefully some of these will answer some of your audience questions as well. So yeah, without further ado, I hope you're ready, panelists, and let's go. So first of all, Amin, I think one for you, perhaps in light of what you've been discussing around Cosmos. So yeah, how can developers in Europe today figure out the best duration and sizing of their projects in each market? And we had a lot of people actually in the audience chat asking questions about duration. So yeah, what are the best ways to figure out the duration and sizing of your project?
Interesting question. I'll start with answering for the sizing first. Well, sizing is more or less a trade-off between cost reduction due to economy of scale when you're increasing the size of your project and the available revenues and also the constraints of your site. So no straightforward answer, but the sizing is the biggest issue, especially in countries where the demand is for services is around a little more than 500 megawatt, around 1,000 megawatts. It's the case for big countries like Germany, France, the UK. It's more an issue for countries. We will talk about it in this presentation, but very interesting markets, also the Nordic markets, where the ancillary service revenues are still very high. Last year, for example, in Finland, around 20 to 50 euros per megawatt per hour for FCR markets, but the demand is around 50 megawatts on average. So the sizing is very important. Installing a big battery can easily cannibalize or saturate the market. For the duration, I think the most interesting thing is first see what the industry is doing. I'll take the case of Germany, second largest storage market in Europe. If we see the installed projects, the average or the weighted average duration, and here the weight is the capacity, it's around 1 hour. But for the under construction and announced projects, we're more around the 2 hours. So there's a trend. We're increasing the duration, and this makes a lot of sense because, as we said, the business model was more an FCR-based business model where it makes a lot of sense to have a 1 hour system and increasing or paying the extra cost of a higher duration didn't make a lot of sense. Now we are switching to aFRR capacity, energy trading, so we need more duration. So the answer is it depends on the opportunities available in the market, and of course with more energy trading revenues we'll need more duration. And for some countries, for example in Belgium, and I think Bart can tell us more about it, we are seeing a lot of projects with a 4 hour duration, and maybe Bart can talk more about the 4 hour duration projects.
That's great. Yeah, Bart, you had that project that you mentioned in Ruyen, which is 25 megawatts to 100 megawatt hours. So being, pretty, I think, an early example of a large scale 4 hour duration project. So yes, as Amin says, is that something you can talk to us a little bit about, please? And what made you decide to go for that 4 hour duration? What was the kind of process there?
Well, I can say a little bit about it. Obviously, how the projects are established and what the customers are doing, it's always very bespoke and a confidential process. But I remember clearly when we embarked on the Ruyen process, our initial plan was to have a 1 hour FCR battery, and that was basically the business plan. And we were staring at this FCR, and then, in the project, as we were managing the renewable portfolio, we could see the value of the energy strategy. So we were actually, pushing very hard for a 2-hour or a 4-hour system, but eventually, because of a turn of events, the project had to reset, and every setback is also an opportunity. So then we put finally there was like a runoff between a 2-hour and a 4-hour system, and because we clearly saw the value of this of these energy strategies, we ended up with a 4-hour system. So it's really something that I would say grows and depends also on the market opportunity, but the trend is definitely towards longer duration systems, as those are more suited to generate revenues with the energy strategies.
Okay, excellent. Thanks, Bart. Yeah, and in terms of plans that change and applications that change, Michael, I was wondering if projects that were initially deployed largely for ancillary services, if they can shift towards providing primarily energy trading and capacity applications, or will most of these newer opportunities be for new build projects only, do you think?
No, so in terms, okay, so there's multiple levels to answer that question. So first one, the obvious one, and a bit confidential in a way, so far as it doesn't interest a lot of people, but if your project is an older NMC type pre-2020 NMC battery, the odds are that you can't change much, because the actual cycling of the battery, like its precise cycling, is like enshrined in the warranty. So those batteries, you're just doomed. You just do whatever it's designed for. But for projects that are older than this, then it's okay. I mean, you can always change the way the battery is dispatched. And even if you have a 1-hour battery, technically you could go to do the trading. You would just be less energy to sell, right? But if you really want this to be a 4-hour battery without doing anything, you just derate it. You just use a fourth of the capacity, and that's it. So it's a bit of a pity, right? Because you're just using a fourth of your connection. Now, the bad idea, let's see, if you want to create a fire, you could just add battery banks next to your existing projects, next to your 1-hour project, and say, oh, here's a 4-hour project. Well, it will probably burn. Because of the way the system is designed, because of the short circuit current or whatnot, or even for the communication issues that you may be facing, all of the above. So if you don't want to derate your system, if you really want it to become a 4-hour system, you probably are more or less condemned to either building another project next door, or at least the PCS are not so expensive these days, so just adding a full AC level, 3-hour AC level system next door, and you slightly oversize in terms of PCS, but it's just better than burning everything down. So yeah, so you sort of can do it, but if you're the short answer is, one way or another, you're more or less starting a new project next to your old one to be able to do this properly. Short answer.
Okay, terrific. Thanks very much. And this next question, I'd like to think this coincides with quite a few of the questions from the audience, but given that I'm a journalist of, I think probably it's fair to say, more limited technical understanding of these topics, I'm going to ask it in probably a simpler way than many of the audience members did. So I was wondering what sort of long-term expectations on revenues developers can give to their investors. And I think probably equally, I suppose, as the intermediary there, what sort of long-term expectations on revenues route to market providers can give as well. So I don't know if Bart, maybe you want to take that question first, and I don't know if Michael, you might have a follow-up view, or yeah, let's see where we get to with Bart's reply first.
Well, I think looking for the long-term revenue expectations of of this kind of assets, I think it's very important also to realize that all these markets, FCR, aFRR, the ancillaries and the energy or day-ahead intraday balancing, they are in isolation. As I showed in the way we optimize them, one is linked to the other. So fundamentally, they will be driven by the energy markets and not so much about the price level, because I think it was Michael who said in the beginning that after, I would say, the energy crisis with the Ukraine war, we've seen actually power prices come down, but actually the volatility has not come down. And if we look at the penetration of increased renewables, we don't see that coming down. So I think in the long-term expectation, it's very important to keep the fundamentals in mind and how essential the battery will be. I mean, we sometimes get the remark of long-term investors, yeah, but if there will be a lot of batteries, will it not be like a flat power curve? Well, basically, we don't see that, as the need for flexibility will be so high and cannot be matched even with the current pipeline of batteries. Now, for a particular number, I mean, we know that in all these projects, we have a double-digit return, but at USO, basically, we rely on companies like Clean Horizon to provide us with, price forecasts, volatility forecasts, which are a bit like the raw material, which we then use together with our trading strategies to generate a revenue forecast. So I think it's we're not really like the best person to say like what will be the volatility or the price for the coming years. I think it requires a fundamental approach and the approach of that Clean Horizon has. So maybe, Michael, you can comment how you arrive at this forecast.
Just giving me the hot potato here. So far, what we see is the following. In Europe, almost all of the revenues are merchant, okay, for storage assets. Maybe some exceptions to this, but let's make a general statement. You're doomed to rely one way or another on price forecasts, which as an investor or especially as a lender, you may feel extremely uncomfortable with, especially if you were, a spoiled kid of, the flat, feed-in tariff or the market premium in the renewable space where everything is just set for 25 years. So it doesn't work like that on those markets. So option one, you just go with that. You go with the best of the providers of forecast, for example, us, and you just go do it. That makes a lot of people uncomfortable. So they go to routes to market, like Bart, or even to some other players, like some route to market that are utilities, and they ask for one of the two options. Number one, give me a floor. And so essentially they're asking the route to market to just take the market risk. Then the route to market is the one exposed to market risk. So it is the one, depending on our forecast or somebody else's forecast, to head or not is going to take the risk. And so that's option one. And option two is even more aggressive, or let's say less aggressive, which is for the investor. They go to another type of route to market, usually backed with the utility, and those guys provide a tolling agreement. Tolling agreement looks just like a very, very high floor, but I'm talking north of 100 or north of 100,000 euros per megawatt per year. And essentially what the tolling agent says is, I'll take your system for 10 years. I'll pretty much will cycle it the way I want, and I'll give it back to you after 10 years, not in a very good shape. So it's a way, essentially, for that tolling agent, that route to market / utility, to just say, I want to be exposed to storage, profits, but I don't want to put the capex. So I'm just gonna lease it in a way from somebody else. I don't get all the mess of building the asset, permitting the asset, and I don't get any of the mess of decommissioning the asset when it's fried. And so, these are your options. So obviously, as an investor, as a lender, that third option is comfortable, but probably, as you will say, Bart, of course it's comfortable because it's risk-free, but it's because it's risk-free-ish. It's risk-free-ish, but obviously you don't get a lot of the upside. Right? There's no free lunch. So these are your options, right? So
But I was just about to say, Michael, there's no free lunch. And what we see in these proposals of tolling is that potential investors and owners of battery would leave a lot of money on the table. And we believe the key is really understanding the market, understanding the balancing, and you basically want to keep the flexibility and the upside on your side, because that's the way to generate these good returns. I think the investors I cannot speak for them, but I would imagine if they would have taken any of the tolling proposals that, they didn't really exist, but tentatively would be there compared to the returns they now see on the market. No risk, no return. And I think the key is really understanding it, being comfortable with it. And it's not really so merchant, because, even if ancillaries will go down, the volatility will increase. You will make it up with an energy strategy. If it's not in balancing, it will be in day ahead. If it's not in day ahead, it's intraday. It's really about this new kind of environment, getting comfortable with the nature of the markets and the volatility.
Absolutely. Chaps, now I feel like you guys could continue this debate for some time, but it's just in the interest of keeping
things moving on. We've had it for 10 years, so we can... Oh,
it's brilliant. No, I love it. I'm sure the audience does too, but I'm sure they'd also love to see some of their questions answered. So I'm going to throw in a couple of these audience questions as we're going, because this one I think does quite nicely, let's say, dovetail onto what you were talking about. So a couple of questions, one of them from Yusuf. So thank you very much for your question, Yusuf, asking, how do you define the profitability threshold? What IRR and at what CapEx, OpEx, and lifetime? And I guess that's kind of what you were alluding to just there. But
I think it refers to that slide that I showed. You might want to show it again. Oh, can I show it? I'm not sure I can. Yes, I can show it. It refers to that slide there. Yes, I've seen this question pop in and out of the questions there. So we computed that. Okay, so this is just a rough assumption, but this is a 15-year computation with a 12% target IRR, a CapEx on the slightly high side of for 1 hour battery of 450,000 euros, which we split in 200,000 euros per megawatt hour. Clearly more expensive than what you get on the market these days. We're going to publish a report on that soon, so yes, it's higher than what you get on the market, but order of magnitude is okay. And 250,000 euros per megawatt. So that includes, the permitting, the transformers, the PCS, all the, everything you need to do to connect your asset. And so that's 450,000 euros per megawatt. That's the CapEx. And as far as OpEx, blah, 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 you can frame it the way you want, but it's more or less 10% of the CapEx per year. And actually, if you zoom on it, it's more like 2-3% is the fixed OpEx, like performance guarantee and whatnot, and 6 or 7%, or maybe 7-8% is actually the cost of recharging the battery and the grid fees on the battery recharge, right? And so if you assume that all of that, and also remember, you may know that there's also a 20%. I forgot how to call this in English. There's if you want to permit 1 megawatt of FCR, you need to show the market 1.2 megawatts. It's
oversizing.
There's oversizing. Yes, forgot the actual name there, but so if you factor all that in, there you go. You're going to get that 12% IRR with a 13 euro per megawatt per hour payment if you have a 1 hour system, and 18 euros if you have a 2 hour system. So you can do this math on an Excel spreadsheet with like no sophistication, just multiplication. It's just, and you'll find those numbers. But these were our assumptions. Spoke too fast? Sorry.
No, not at all. Not at all. I think it's appreciated given the restrictions on time.
It's just math. Yes.
There's a few. Yeah, I mean, there's a few other questions around kind of risk appetite from investors and sort of profitability threshold, but. There was a question here about, so I just wonder if this is a variation on, so you can point me in the right direction if not. But so Hitesh, thank you for your question. Asked, have you managed to determine the minimum intraday price spread or delta required to execute the intraday trade? Or to clarify, what is the minimum threshold between buying and selling energy for intraday trading? Does anyone want to take that on, or is that one that's better discussed offline?
I'm happy to share a bit how we think about that. I mean, there are a lot of elements that you need to factor into account on looking what kind of intraday spread would be suitable. Obviously, batteries have a physical reality, so you only can cycle them with a certain number of cycles. So you need to take into account, like the vendor, how many cycles do they permit? Is there a limit, per day, per year, per that? And then you also need to figure into account like battery degradation, like how much do you want your battery to sweat to be left? And I mean, at USO, basically our approach has been, well, let's involve the investor in that. And different investors can have different risk appetite. And we already see that some say, well, use our batteries maximal, let it sweat, even if it's at the limit of what the vendor is permitted. And others would be saying, well, let's be more cautious. We have here an asset that's envisaged to have a life expectancy of 10 years or 15 years. So we really I think it's when determining this spread, it really depends on all these factors, actually, and there's not a unique answer. And very important also, even if you set a spread, the market will give you what the revenue is. So it's also very important to look back, and we do that very daily, but also monthly or every trimester on like what spreads are on average generated with the asset, and is that in line with the strategy we want from the asset. So that's a bit our experience and how we deal with that.
Okay, thanks. And I think, in terms of the battery degradation, I think there's a few people asked questions about that. I presume that's something that goes into the type of modeling work that you do. So yeah, just wondering if you have a particular view on that. And I think there was a specific question on that. Essentially, so Roman was asking how important is battery degradation when trading your batteries, and is it something you're considering at the moment?
It is. It is very important, and of course we are considering it. Every year, the available energy capacity is modified to take into consideration the degradation of the battery, and the degradation profile depends on the cycling. So also we are taking into consideration the cycles limit, and this is also a sensitivity analysis parameter to determine, especially when we are considering a lot of energy trading, what's the best number of cycles limit for an energy storage system. So yeah, of course it's taken into consideration, and it's a very important parameter.
Cool. And in terms of that modeling as well, we had quite a few questions coming in from the audience about co-located or even hybrid renewables plus storage projects. So just wondering, what sort of market participation models are possible for those, and how you view that?
Yeah, that's a less straightforward answer. Short answer: it depends on the project. It depends on the country. There are some benefits for co-location, depending on the country or the project, reducing the grid fees. Also discharging during peak hours. So really the business model really depends on the spreads in the market and how high the prices during peak hours are compared to prices when PV is producing, for example, in the case of PV. But the drawbacks is you are limited due to the grid connection limits. If your project was designed for a PV project, and then you want to add a battery, and the grid connection is limited, so you cannot fully use both of your assets. So there's a sweet spot that you can find using a sensitivity analysis, using our tool Cosmos, but there's no straightforward answer to say it's better with standalone PV or co-location.
Absolutely. Okay. Yeah, I guess those participation models are still something to be worked out, and I think there's a lot of people trying to do solar plus storage in particular, and kind of working those challenges out. Okay, so folks, I think probably one last question for today, and I'd like to ask, obviously we're talking about move away from providing primarily ancillary services, but ancillary services have been a foundation of revenues for revenue stacks for Best historically. So do we still see ancillary services an important set of applications that Best will continue to provide, Michael? I mean, I guess ancillary services have been really important for you guys and all of us to now. So yeah, how do you see the future of that?
So here's my here's my thinking. It will remain vastly important in the foreseeable future. However, how vast this importance is, it will slightly change. So let's say between now and the next 3 to 4 years, it remains, it's a make or break for the business case. It's just how it is. And as we've seen I've shown this in a bit of a catastrophic manner when on purpose, I showed the French FCR, which is a bit more aggressively trending downwards than the other FCRs, but I had to make a point. It's just manipulation. Propaganda. That's how propaganda works. But in general, there's a downward trend on ancillary services pricing in Europe, and in that context, probably one of the most key sensitivities in valuing an energy storage project in Europe is actually your commissioning date, the COD. If you lose 1 or 2 years of commissioning dates, that's a lot of IRR percentage points that are going away. So that's actually what you do not want to do. Now, that being said, voilà, those business cases, as we build them now and as we will build them next year, will rely on ancillary services, period. What will happen after this, that's my thought, but this may change. I do believe that there will be some form of subsidizing scheme for storage that takes place in Europe, and we're seeing the first few examples of this through the Spanish tenders, through the Greek auction, etc., etc. So those things are appearing, and I think they will materialize simply because down the road we just can't keep producing PV or wind, or especially PV, when their capture prices are going to drop. So at some point, any form of incentive on those will go, because what needs to be incentivized, if you really want to put renewables, we need to incentivize the fact that we just shift and control their generation, the time at which to generate their power. And that means subsidizing storage. Again, I'm not saying any more about the scheme, but what happens is, even if there's a subsidy there, again, whatever the format, there will still probably be a smaller fraction of a merchant exposure of storage, and in that, probably the ancillary services for that small fraction will still play a huge role. So, even if 50, 60, 70% of the capex is more or less covered, this will be the difference. Ancillary services will be the difference between a 7% IRR and a 12% IRR, for example. So today it's life or death. Tomorrow it may be just boring profit versus interesting profits. This is really how I see the revenue stack of storage systems to take shape in the next 10 years.
Excellent. Thanks very much, Michael.
That was free. That was free. Did they pay for that? Did they pay for that? That was just free.
Yeah, any thoughts on that to finish on, Bart?
Well, my views are quite aligned with those of Michael. I think, the ancillary services market will remain very important for batteries, but I would even say that batteries are so well suited for ancillary services that in the future, the ancillary services will be only provided by batteries. But it's not the reverse. Batteries will not only be used for ancillary services, they will be used for energy strategies and way beyond ancillary services, for the reason mentioned by Michael, because we cannot realize the energy transition and the big penetration of renewables without deploying them for the energy strategies to shift renewables, to shift grid constraints, to shift all that. So I think it's very interesting to see. And also, like, the pricing in the ancillary markets will be set by the energy market. It's not because there will be so many batteries that all the pricing will be done by batteries that the ancillary services will go to zero, because obviously they will have an opportunity cost in the other markets. So I think it's not one or the other, but both of them, and all by batteries, yes.
Fantastic. All right, folks. Thank you so much to our audience members for joining. I can see in the questions tab, there's quite a few of the audience members are thanking all of you for the speakers for the presentations and the webinar. But conversely, I think we say even more than that. Thank you so much to the audience for coming on. But certainly, from my point of view, I'd like to give a heartfelt thanks to Michael, to Amin, and to Bart. Guys, it's been really great having you on here. It's been a lively discussion. I think everyone's really benefited from your expertise and your insights, and it's been a lot of fun as well. I think we can all agree. So just want to finish up with all of that, and just one final thank you so much to our audience, and not just thank you for joining, but thank you so much for being a part of this incredible industry that is transforming the way that a lot of us think about energy, the way we use energy, and everything else around that. So from myself and all at Solar Media and Energy Storage News, and from our speakers and panelists, thank you so much for attending, and we'll see you again soon.
Thank you. Thank you, guys.
Thank
See
you.
Bye.
Thank you. Bye-bye.